All right, the Real Estate Board of Greater Vancouver came out with its monthly report covering the month of October. It's now November 2nd, Friday, November 2nd, and I'm going to review those numbers here real quick and just explore some of the consequences that the numbers might have on a few things. So you can see in front of you that the headline of this article is Vancouver home supply up as sales drop below historical average in October. I covered this in a video last month at the start of October. Basically, real estate sales have been declining quite steadily and quite significantly. This article starts out by saying the Real Estate Board of Greater Vancouver says home supply is rising and reaching levels not seen in roughly 4 years, even as the average price inches up year over year. Well, the Real Estate Board of Greater Vancouver is is working really hard to put a positive spin on this. They're, in their opening sentence, they're talking about home supply rising and average price inching up year over year. That's sort of misses the point, a pretty significant point of the report. So it says the composite benchmark price for all homes was $1,062,000 in October, up 1% since October of 2017, but down 3.3% over the last 3 months. Well, that's probably kind of relevant. More relevant, sales of all types of homes in October fell 34.9% compared with the same month last year, dropping 26.8% below the 10-year October sales average. So a fairly large decline, 35% basically from last year. Nearly 13,000 homes are listed in Metro Vancouver, 42% more than in October 2017. So that's a big increase in the supply available, which should put pressure on prices going forward. And even though there was, I suppose, a marginal or slight increase in price for all properties, I note here that there has been a 5% drop year over year in detached homes. So detached homes are now or have now declined in price by 5% and 3.9% over the last year. And sales of townhomes, the price has gone up 5.8% over the year over year, but over a 3-month period, townhomes fell 2.8% and condos dropped 3.1%. So it seems, at least in recent months, prices are dropping across all property types in the last 3 months. Again, the board tries to put a positive spin on this, saying that the price drop is providing a little relief for those looking to buy compared to the all-time highs we've experienced over the last year. Well, they are salesmen, or salespeople, so hardly surprising that they want to put a positive spin on this. I found this chart here which showed the last 6 years of sales. You can see on your screen there, the red line is 2018. So certainly the lowest. It's dropped now to the lowest in the last 5 years and quite a bit lower than the 10-year average. So it's hard to be forward-looking and hard to predict what is going to happen with sales going forward. But I found this article that showed some information that indicated to me that there are going to be some troubles selling condos up ahead. This is from betterdwelling.com. I quite like this site. There's a lot of real estate information provided by the site. So they're covering pre-sale inventory in the condo market. So pre-sale units. So they say here the number of pre-sale units launched fell last month, being October. 688 pre-sale units launched, in September, down 33.78% from the month before, and a 26% decline when compared to September of 2017. and a lot more inventory is expected in October. So despite that decline in the launch of pre-sale units, the absorption rate was significantly lower. So despite there being a 30% fewer units for sale, a fewer of those are still being absorbed. So September only saw 38% of units launched absorbed, down 13.63% from the month before, or an annual decline of 52.5% when compared to the same month last year. That's a big decline over last year's absorption rate, even though the number of units were already down by a quarter. So you can see that in the chart here, on the far right, September 2018 absorption rate, or the sales to new listings, it's quite low compared to any month in the last 13 months or so. And more concerning than that, I would suggest, is that the site estimates that pre-sale projects in October are expected to increase by 203%. So not 100% increase, a 200% increase from September. So a 13.49% increase from October of last year. So if the absorption rate is crashing, and the new listings are going to be going up by 200%, then that's going to pose a trouble for anybody selling these properties. Despite these declining sales and the increasing supply, Vancouverites are still confident in property market in face of the sales slowdown, according to this article from The Sun. So the Sotheby's International conducted a survey that found that 79% of Vancouver respondents still believe that the financial gains on their home will outperform or be on par with financial investments over the next 5 years. So there's still a lot of optimism amongst I guess millennial, that's not millennials, those aged 20 to 45 are still quite optimistic despite the declining sales figure and the increasing supplies. But the question is, what happens if BC's housing bubble bursts, as bcbusiness.ca explored? This is what I like to sort of turn my mind to. A couple things from this article. I'm not going to read the whole thing, but one thing I found concerning, I suppose, or important, is a reference here in the article that according to the National Bank of Canada, a typical Vancouver household with an average mortgage would have to part with an additional 9% of its income to service a 1% rise in interest rates. So if we're talking about right now, I think mortgage interest rates for those renewing would be about 1% higher than they were even a year ago. And this time next year, they will probably be 1% higher again, which means that, roughly a typical Vancouver household will have close to 20% more of its income to service its debt. That's quite a significant increase from just a small increase in the mortgage of a 1% increase. The other reason I wanted to bring up this article is because it, for the reference here, that the sector being real estate, according to this article, now comprises almost 25% of provincial GDP, and it's citing Statistics Canada. So 25% of GDP coming from our real estate and construction industry. We're already down in 2018, year to date, about 30%. I I tabulated all of the figures for the year, and last year to this point was 31,181. And this year it's 21,939. So it's a decline of 29.64% sales volume year to date in 2018. Considering that's a quarter of our GDP, 30% of a quarter, that's about 11% or 12%. Sorry, that's about 8% of the GDP that might be gone. So, and it could be worse than that because the average sale price of real estate has been declining as well. So, we might be facing, already a 10% decline in GDP from this declining real estate. What other consequences might there be? This was a survey done recently, this last month, by the CMHC. Found that 85% of first-time homebuyers are spending the maximum amount they can afford on a property. So this ties back into that last article I showed you, suggesting that a 1% increase in interest rates would lead to a 9% increase in the cost or the amount of a typical person's income to pay their mortgage. And considering that, according to this survey, 85% of home buyers max out their budgets to purchase their property, they, where are they going to get a 9 or higher percentage more of their income to pay for their mortgages? That is a question that they're going to have to answer, and it's going to have to mean spending less on other things for those who can even afford to continue to pay their mortgages. So you might expect default rates to increase from this, and certainly consumer discretionary to decline in the province. Things like that. So this is a information sheet from the BC Real Estate Board, talking about careful what you wish for, the economic fallout of housing price shocks, because of course many people have been calling for a decline in property prices, including our own government, who set out to reduce property values. I just wanted to take one piece from this presser, or this information here. This last paragraph. Across the economy, a negative home price shock will slow growth. Tens of thousands of jobs will be forfeited. The unemployment rate will shoot up. A 10% negative price shock will slow real GDP growth to 1.5% from a baseline of 2.7%. That's $3 billion in lost activity. If home prices fell 35%, a level some activists are championing, the BC economy would collapse into recession. The average homeowner would have lost $245,000 in equity. Housing starts would fall by half. 64,000 jobs would be forfeited, sending the unemployment rate to 7.5%, with $4.4 billion in foregone retail sales and a colossal $8 billion loss to GDP in the first year. This analysis does not account for the negative impact on provincial tax revenues, expanding deficits, ballooning debt, and credit downgrade risks, which I'll touch on in just a little bit. But I want to just stick with those figures for 1 second and reflect on how significant they are. If home prices fell 35%, which personally I think is not that unreasonable, considering that they've come up so far, and that on metrics of affordability they're considered 60% 40 to 60% overvalued on terms of affordability metrics. I don't think a 35% decline is impossible by any stretch, and that would mean we would be going into a recession. tens of thousands of jobs would be lost. So it's not going to be very fun. All of us can be affected by that here in British Columbia. And referring to the revenue of the government takes a lot of revenue from real estate. Its biggest, I think, single source is the property transfer tax, which in 2017-18 it collected $2.1 billion from that source alone. So that's a huge source of revenue for the government. What's it going to be for 2018-19? I don't know yet. They have already lowered their estimate. So this in front of you here is the budget for 2018-19. This was released in February of 2018. You can see property transfer here in front of you. And 2018-19, they projected $2.235 billion from property transfer tax. Since that time, they have lowered their estimate by $250 million. They did that in September. Unfortunately, I couldn't find the direct source material for that update, only news reports on it. So this is from the Financial Post in front of you right now. I'll put the links to all these articles in the description. But I could only find this reported in the news, so I can only assume it was the financial update was done in a press release. But you can see here that they've included a decline in property transfer tax revenue of $250 million in their financial update for 2018-19. But that still means that they're expecting about $1.9 billion in revenues from property transfer tax. And I just wanted to show you this here. This is an old article from the CBC, and this was from April 2017. And the point is here, it provides a nice history of the revenue from the property transfer tax. As recently as 2015-16, and the property market was quite robust. The property transfer tax was $1.53 billion. The prior year, 2014-15 fiscal year, property transfer tax revenues were $1.065 billion. And earlier than that, they were lower. 2012-13 saw $750 million in tax revenues from the property transfer tax. So considering that sales volume for the year to date is down 30%, and that's in the greater Vancouver region. I didn't collect up all of the regions, so those figures will be different. But that's the greater Vancouver, which is a significant portion of the BC real estate market, of course. Down 30%, the average sale price down as well. Property transfer tax revenues are going to be down more than the 10 to 15% that they budgeted, I think. I expect they'll be down probably a quarter. So I think that's so far. And if the declines continue, of course, and we get back to 2014 or 15 levels, property transfer tax, which isn't that long ago, property transfer tax could get down to $1 billion. That's 900 million less than they're projecting right now. And so you can see here their plan for 2019-20 and 2021 calls for increasing property transfer tax up to $2.2 billion and $2.3 billion. So I think those numbers are really going to have to come down. The future is always uncertain, of course, but property values and property sales really are often a function of interest rates, and interest rates we know are going to be going up for the next year. So I think it's the most realistic projection that property sales will be declining and property prices will be declining. So these figures will only continue to go down from here. So that's it for today. Thanks for watching.